So there's a very crowded short on the hyperliquid side, pushing the funding rate down to extreme levels, like negative 600% levels. And a lot of people want to hedge that funding exposure. It wasn't even a smart contract hack. The attacker was able to spoof a message on the validator network and know exactly which validator network to attack. To give you a perspective of the liquidity that we can handle, you can swap more than $10 million on Pendle with very minimal price impact. And I don't think you can see any other trading platform support trading of that size. A little bit contrarian given that I'm in crypto, but I do think there's lack of regulations and enforcements in this space. It took us a long time to find product market fit, a good few years actually.
Hey Dan, welcome to Beyond the Yield. Happy to have you on board. What a crazy week, right? What a crazy start of the week. So first of all, yeah, how have been you handling it so far? How has it been going for you?
Yeah, pretty good on my side. Thanks for having me. It's definitely been a roller coaster week. Start of the month actually. Yeah, what Resolv, Drift, and Kelp in one go. But I think the Kelp hack is the most interesting one. I've been following it top to bottom. Uh, uh, yeah, as much as I can, and just try to gather as much insights as possible, because this hack is much more sophisticated than what most people understand. But yeah, I digress. That's mostly what's been on my mind right now. And for context, I lead the growth and marketing team on Pendle. Pretty much told everyone, slow down on the marketing front for this week, because all attention is not going to be on us. It's going to be on the very fast development of the RSE saga and its potential contagion across the board. So yeah, something that we're monitoring very closely as well.
Yeah, it makes complete sense. I guess everyone's minds are now on it, like looking how it develops. Vera news coming in every couple of hours or so. So yeah, definitely something evolving. Maybe we can touch base on that a bit more later. But to begin with, I would suggest maybe you could give like a short intro about yourself. How did you end up in crypto? Yeah, what made you come to Pendle, and like overall your journey in Pendle so far? So maybe we can start with that.
Yeah, sounds good. Pendle is actually my first crypto journey. Um, excuse me. I liked it from its. It was an interesting idea because I was pretty much into finance back then, and I was pitched that it's a new protocol letting people trade interest rates or yields in crypto, and found that pretty fun challenge. So that's how I got to join Pendle, and we have then Pendle launched like good few months, 7 8 months after that. And I've been leading the growth team pretty much ever since the Pendle protocol, Pendle V1 launched back in 2022. Yeah,
So
so
you've
been to
been
Pendle for
basically from the beginning, right?
yeah.
With Pendle since the launch. So I guess like the first question is like, what led you to such successful launch and then growth, right? Because like Pendle now is like one of the major DeFi protocols in the space. So what would you call the main success factors that led to such growth? Like, did you believe it since the beginning that it will be so big, or you were also surprised? Like, what were you seeing what were you seeing back then about what would make Pendle so special?
Yeah, I wouldn't say we had a successful launch. Our launch was actually pretty shit. It took us a long time to find product market fit, a good few years actually. And if you were to ask me to pinpoint in a specific reason or a specific turning point, I don't think I'm able to name one. And if you ask me if I'm surprised at the success, not really. Or rather, to give you a bit of sense of perspective on where I'm coming from, I or rather the Pendle protocol, the Pendle team, we kind of believed that interest rate management or interest rate swaps in general will be a mainstay in crypto. People would want to have more control over their exposure to yield. Either they want more of it or they want to hedge it or like get fixed yield. It's exactly what Pendle does, which I think we're gonna get through later, hopefully. But the idea is, instead of being purely just exposed to yield, you should be able to manage the yields. And that was kind of like the core thesis. And we tried a lot of different flavors of such an idea, either creating different trading campaigns, different supporting different kinds of asset, or creating different UIs for different products. But I would say it's a culmination of a whole lot of different experiment, which led to sometimes seeing an exponential growth just a little bit. And then if you have enough of that, you end up with a protocol over $1 billion in TVL. To give you a bit more context, we started off with Pendle V1, which saw very little success, but it gave people a glimpse of what could possibly happen. It also gave us a glimpse of what could possibly happen. And then we supported an asset called Wonderland, which is a Olympus DAO fork on Avalanche. Supported that, which gave like 10,000% APY, which was fun to trade, but then liquidity was kind of shit. And then we figure out all the problems with that, and then kind of concluded that Pendle V1 is the problem. So we decided to rebuild the architecture to a much better protocol. Then we launched Pendle V2. And then Pendle V2 also saw pretty low traction because pretty much the same product as Pendle V1, but a much better tech stack. And then Pendle V2 launched. Took us a while to figure out what asset worked on Pendle. We supported the LST. I'm not sure if you remember, like there's a Rocket ETH and all the other ETH assets that came out. And then there's like Balancer, an AMM that supported all of the different LSTs, RDETH, STETH, and all the ETHs. And then they created AMM, and then there's Aura, which is like a protocol that built on top of Balancer. We just kept building on top of the stack. Then that gave us a glimpse of success. Another exponential growth. We support GLP from GMX on Arbitrum, and then that gave us another round of exponential kick because there was another hype asset. And then we continued to do that until the eventual tipping point will be points. We supported trading of points asset. That was where we supported EigenLayer and a bunch of other points asset. That was a final piece of growth to reach where we are right now.
Okay, that's very interesting. And so, like Pendle, at its core, it's explaining it to non-TradFi people might sometimes seem a bit hard, right? Because you're trading not just tokens, but you're trading the yield of the tokens. And I'm curious, you mentioned that you had quite some barriers initially with adoption. Was it because people weren't aware of like how to use this model effectively? Or was it because the yields were not attractive, or just the market wasn't ready because of some other reason? So curious how you see what prevented you from adopting growth earlier, because like obviously this can be useful tool for hedging, as you mentioned, for trading yields, right? So it sounds like as it should be an overnight success almost like.
Could be anything. I mean, if we knew what exactly was the problem, we would have been successful since day zero. But again, honestly, I don't know. But I could tell you exactly what assets and exactly what moment gave us some level of growth. There was no success overnight, I would say, and it's just a very consistent, small wins that if you compound them again and again exponentially, they eventually end up being. They eventually look like getting overnight success in the last exponential growth. But I would say the constant iterations were constant education and also consistent app development and different flavors of asset listing to be able to support more and more kinds of assets on Pendle. That's one side. The more recent growth will be on the vertical integration side of things. So we've been able to support points asset, which are off-chain, shenanigans that we figured out how to tokenize and support. We also have started, that's the vertical integration downwards, and the upward integration was to get our assets, like our Pendle PTs and the fixed yield portion of the assets, to be supported in a lot of different money markets. A lot of assets went to Aave and a lot of different money markets eventually. But I would say that effort was started since Pendle V2 was launched, and only saw success 2.5 years to 3 years later when people start figuring out how to use this. So I would say it's kind of like we just work on everything and just make sure see what sticks, because I don't think running a startup you can really pinpoint on one specific problem and tackle that one problem. A few startups maybe have that exact problem, but yeah, definitely not our case.
Yeah, makes sense. You already briefly touched on what's growing right now, like Vault's curators ecosystem, integrating with DeFi protocols. But I wanted to speak more about in the beginning of the year, several months ago, you announced this big scary mind map, right, with all the initiatives, all the focus points that you really see most perspective in. So maybe you can briefly walk us through that. What are the main items that you've chosen to focus on, and maybe some reasoning why exactly these items, why do you believe in this growth? Because there are a lot of different things, right? Starting from Boros growth, but then also going into AI, highway to centralized exchanges and stuff like that, right? So maybe like you can walk through some of the main items, explain why do you think they are so important, like what's the overall big vision for Pendle, like where do you see its growth further, and just to help understand like where the market is potentially heading to.
It's a pretty big and scary mind map, but the high level idea is pretty simple. We want to make the best yield trading experience possible, and we want to create the tools for you to be able to do it. Now, there are a few ways, problems that we see to achieve that. Now, one, Pendle is scary and complex, and I don't think there's a way for us to fix that impression for most people. Because by the nature of the product, it is complex. We can simplify it to a couple of words, but then usually the follow-up questions is when you start to see layers of the product complexity. But we can simplify it by just abstracting the idea away from you completely and just tell users that they can get fixed yield through Pendle. How do we do that? We just have a separate UI that just wraps all the complexity behind the scenes and just wrap it into a simple product. It's fixed yield, and that's pretty much it. But then that also begs the question, like, who would come for this? And I think the main competitor for such a product, or rather the easiest group of people for us to siphon, would be the earn product users on centralized exchanges like Binance Earn, OKX Earn, and other Earn products. They're earning like 2 to 4% in yield in their Earn products, and they have billions in deposits. And we want to make it simple.
Which is nuts given the current opportunities in the yield market, right? Like it's really low.
Yeah, and we can provide a much higher yield than that. And we want to make it simple for them to deposit into Pendle. And that's the whole idea. And we're just going to call it Highway to the Sexes. That's our the idea of the project, which is basically what they have to do is to send the money from the Sexes into a contract address, and then we'll do everything for you. Then we'll turn it into a fixed yield. And then once it's done, we'll send it back to your Sex account. It is as simple as that. So it's as simple as just clicking deposit onto a Sex Earn product. And we want that to be a feature that we showcase on Pendle as well. Now, aside from that, there are a lot of people who get access to fixed yield on Pendle PT, and these are the more sophisticated users, and they take this PT as put them into a lending market as collateral, borrow some funds, and then buy back PT. Think of it as like a leveraged exposure to fixed yield on Pendle. These are the more advanced side of things. Why don't we make that one click for users instead of having to do it manually, which will take a long time and also takes a lot of effort for you to monitor all the positions. And we want to make it one click. Yeah, it's a very simple idea like that, which created the idea of one click PT looping. We also have this idea of that our liquidity should not be constrained by how much TVL that we have. Ideally, our liquidity by default should be infinite. And how do we get to that state? Because we want to make trading experience as seamless as possible. And then what we found was that we introduced a limit order system a couple of years ago. And for the pools that are very successful, majority of the volume actually comes from limit order. And our limit order was not incentivized at all. What if we can figure out a way to incentivize people to park limit orders and to get all pools into the state where we see our most successful pools are in, which is most of the trades go through limit order, and the liquidity depth that we can handle through through limit orders was much deeper, and that was the whole idea. So we said, okay, we can technically achieve something like an infinite liquidity depth if we figure out how to incentivize people to move in that direction. So we created limit order incentives, and we want to create something called universal limit order, where you can park limit order across multiple pools with the same asset. And again, there's much more initiatives with it, but this is kind of what we did. That is one of the branches that we've already done, and I can tell you for sure that has been working pretty well. To give you a bit more context, we just launched an asset called USDG by Paxos, which is an RWA asset, and to give you a perspective of the liquidity that we can handle, you can swap more than $10 million on Pendle with very minimal price impact. And I don't think you can see any other trading platform support trading of that size. And Pendle can easily support, yields of that size without diluting your yield position that much, actually, or rather without diluting your yields at all. And yeah, that's kind of what we are looking to achieve on the infinite liquidity side. Now, on this big scary mind map, there's a lot of other things like cross-chain PTs, which is PTs don't have to exist in one chain. You can exist in every chain out there. Basically, Solana people want yield that we provide on Ethereum. We don't have to restrict to only Ethereum. We should be able to bridge the assets elsewhere, and the fixes should be there as well. PT should be able to use as collateral in every money market out there, not just its home chain. Again, all of these initiatives, just the idea is to make sophisticated traders' lives easy, and also the noob traders' life easier, just to be the best in class yield trading protocol. And that's kind of the gist of the big scary mind map.
That's a lot of to unpack. But basically, maybe to begin with, like you mentioned, so as you said, Pendle is a very complex protocol, right? Like comparably complex to, let's say, Aave or lending protocols, where you just park your stables and you earn yield. It's as simple as that. And Pendle was created for more sophisticated traders, as you mentioned initially. Like it was created for hedging potentially, and these are very advanced financial instruments which require advanced knowledge, right? But at the same time, now you're mentioning that you want to go into like a more user-friendly way, where I guess more users can use Pendle directly rather than indirectly, that you become kind of the lending protocol yourself, you become the exchange kind of, right? Because as you mentioned, USDG, like you can execute really large exchange orders. So my question would be like, how do you see building for the most advanced users versus building for everyone to use? Because sometimes you can find your niche in these high value users who are using it only for advanced strategies, but in other times you want to grow to gain like more retail activity, more liquidity and stuff like that. So yeah, just where you see Pendle growing in the coming months or even several years.
To clarify on your questions, Pendle did not start off catering for complex users. It's kind of like if you go to a bank and you ask for a fixed deposit, they give you a 3% fixed deposit. It is a simple product on the user's end. What they do behind the scenes to enable that 3% fixed, you have no idea how complicated it is. Kind of what it's like. We never strive and pride ourselves to be a complicated product. No. It's like we build the product, and it's ideally catered for everyone. The complex users should know how to use it, and the people who are less sophisticated should also know how to use it. Now, I want to preface that. Then second, on trying to be a money market and exchange myself. That's not what I meant, but more like building a product suite that helps you do whatever you want to do with the money markets, with the with everything else easy. So for example, you can swap into any Pendle fixed yield with any assets. Like that just makes the flow of, okay, if I want to buy this asset, let's say I want to buy PT USDG, I don't have to get USDG from an exchange and then get PT on Pendle. No, we can help you route anything and then route it to PT USDG. But doesn't mean doesn't mean that we're building it ourselves, but it's more like we're leveraging on the tools that other people have built to enable to make your life easy. And that's kind of what we built. Just build the tools to make people's life easy to come into Pendle. And again, it's the same thing. Like for fixed yield, they don't have to know how we enable fixed yield. They just need to know that they're getting fixed yield through Pendle, and can create like a whole separate interface for that, and then a whole different user flow for people to get fixed yield. Same thing for leverage yield. To your question on where we see this direction grow, just like anything else, most of the growth will happen from sophisticated users and bigger funds. But most of your mind share and attention would come from the retail side. So we should ideally work on both. But I do see that our growth trajectory moving forward will be the same. Most of the money will come from funds and institutions and bigger players because that's where the money is. And most of the attention and the hype come from the retail side. So you have to build for both.
Makes sense. And you've already mentioned institutions, and I've seen you've been finding quite nice growth in the RWA space, especially with some recent launches of like of RWA-based yield products, right? Like the yields on some of these tokens are really great. I think a couple of days ago, I saw some of them are reaching 15% and even more. So maybe overall, like, how do you see the RWA space evolving from first-hand experience by integrating with these protocols? Where do you see the main growth factors? And yeah, how has it been going for you so far with all these like new instruments in the DeFi space?
Yeah, generally pretty good. RWA space is definitely growing. I can say for sure that as a protocol that supports these assets and directly interfacing with these underlying protocols on RWA, a lot of funds are moving towards the RWA space, mainly because it's technically a pretty simple product. What you're doing is bringing the yield that is off-chain and you're bringing it on-chain, and tokenizing that is not a complex mechanism. It's not like you're building Aave from scratch. Just building the yield off-chain and you're building it on-chain. The difficulty usually lies on the legal front, but that is a different challenge that most DeFi protocols don't have. And I think a lot of protocols, I think the growth is good because you're basically bringing external money into DeFi. So it's a good trajectory for us. I know a lot of people don't like it because they claim that it beats the ethos of self-sustaining crypto and DeFi ecosystem, but I think that's a pretty close-minded way of thinking of the industry. But yeah, I think we are in a pretty good shape to see more institutional capital flowing into DeFi, mainly because of RWAs, also because of the name association that people can draw and people trust traditionally. So I think we're in a pretty good spot. And I think the growth over the next coming few weeks, months, should likely come from the RWA space.
Do you have any favorite RWA use cases so far? I saw you're like, for example, allowing to trade MicroStrategy yield from their stock, right? Also some other different RWA use cases. So do you have like any ones where you see the most potential to gain more and more adoption in the space?
I don't really have any winners in mind, but I would say that the STRC narrative is pretty cool. For context, it's a preferred stock of one of Strategy's preferred stock that is soft pegged to $100 that gives dividends of somewhere above 10 to 11%, depending on the price of STRC. But yeah, I do find that asset is pretty cool, and people have figured out ways to bring it on chain in many different flavors. For now, that's probably the meta. Just like anything else in crypto, it's not a permanent meta. So I'll see where it goes right now. But for now, that is one interesting thing. Second interesting thing will be Paxos USDG, which is a sort of like T-bill slash gold backed dollar by Paxos and Global Dollar Network. That asset is also pretty cool on Pendle, offering pretty high yields. But I don't think it can compete against the STRC related yields. I think the fixed yield that we're offering is like upwards of 15% on a somewhat stable coin related asset. So yeah, I think that's kind of like my take on the RWA space for now.
STRC sounds like a perfect DeFi degen product, which can be looped very nicely and like used on chain, right? This is what crypto people love the most.
Yeah, but I wouldn't say it's really that degen. It's just a way for them to raise capital, right? I mean, like any company can issue a preferred stock that behaves in this specific way. I mean, MSTR right now trading above NAV means that it is quite unlikely for them to raise funds from issuing more MSTR. Also, because they have obligations on existing MSTR stockholders, and they wouldn't want to dilute the existing stockholders. So they've been issuing a lot more preferred stocks in different flavors, it's like STRK, STRF, STRC, and I think STRC is the one that caught a little bit more attention because it's cumulative dividend distributed monthly, and asset that is roughly trade on $100 par, where dividends distributed on. So pretty cool asset, but I wouldn't say it's that degen actually. Yeah.
Yeah, just maybe like packaged very nicely for degen activity. Yeah, I wanted to shift maybe more attention. Also, you've been recently developing a new product with its own name, which is Boros, right? Really interesting product. Can you explain maybe briefly what it does? Why did you decide to launch it? Why as a separate brand, not under a Pendle brand? Just overall, maybe you can explain your vision behind it.
Sure. One sentence on what it is. It is basically an interest rate swap, and that's pretty much it. If you don't know what it is, it's very simple. If you have a floating rate exposure, this is a fixed rate that is floating and changes all the time, you can swap it to a fixed rate, and vice versa. You can swap fixed rate into a floating rate. This idea is not new at all. It is a very one of the biggest industries in TradFi or just finance in general for people to swap their interest rates. The idea is you can pay a fixed rate in exchange for a floating rate, or pay a floating rate in exchange for a fixed rate. It is as simple as that. Why we decided to launch it is because we found limitations on Pendle V2, which is we can't support funding rates or off-chain rates, for example, and the leverage is not high enough. So we decided to start, and basically it's not an interest rate swap model per se for Pendle V2. Yeah, so we decided to rebuild it and then build Boros, and then and we figured that Boros, the identity and the product is very different from what Pendle V2 is offering. It is still part of yield management, but the way that it achieves that is completely different. So we decided to call it a completely separate name. But then we also figured it doesn't really deserve a separate token because one, they'll be too greedy on our side, and two, it would be very difficult for us to manage two different tokens at the same time as one company. It's kind of like, why doesn't Apple release a new company when they launch a new product line like iPad, an iPhone or AirPods? They technically could be individual companies, but it's not. It's still part of the same product. So that's kind of the same idea as well. So Pendle is like an umbrella company, and we have a few layers of tools of yield management that you can use. And then there's Pendle V2 and Boros.
Okay, I've seen you've been getting quite some traction with volumes spiking even like more than 100 million a day during some days, right? And it's been live for what, like several months, right? It's not that long ago since you launched. So what led to this like growth right away from inception, right? Like what made it so successful? What did you I'm maybe also interested, like, did you by yourself identify this need, or were your users, Pendle users, requesting such features to actually be able to trade the funding rates on different exchanges? Because as you mentioned, that this is a product which TradFi has adopted since ages ago, right? But like it never got traction in the DeFi space. So yeah, what led to you deciding on this specific launch and getting such huge traction right away?
I wouldn't say our traction is that big actually. To give a bit more context, the interest rate swap market is in the trillions in traditional finance compared to the spot market, and we are tiny compared to the crypto spot market. So it's a long way to go. Um, but yeah, I would say what gives the first glimpse of success right now, interestingly, will be different from the Pendle V2 side. On the Boros side, it is more institutional driven. But I also say because of the Pendle brand, there's some level of trust association there. So some of the institutional players are comfortable playing in Boros immediately already. But that said, I think it is also a product that resonates with a lot of people. One of our biggest recent success would be on the oil markets that we support. Basically, to give context, there is a big backwardation in oil futures contract, meaning the longer dated futures contract are at a big discount compared to the short dated futures contract. And what people are doing on hyperliquid is basically short the hyperliquid oil market and then long the futures, long dated futures contract, and this gap will basically close. So there's a very crowded short on the hyperliquid side, pushing the funding rate down to extreme levels, like negative 600% levels. And a lot of people want to hedge that funding exposure because if you're short and the funding is negative 600%, you're basically paying 600% APR. And a lot of people are coming into Boros to be able to hedge that position, which is what everyone does in traditional finance when they want to hedge against interest rate exposure. Let's say if you're a company that is exposed to real estate or inflation rate for example, and if you're highly exposed to that, you want to be able to hedge against that rate, so you open a swap on that position. Same thing on Boros. A lot of people are exposed to the oil funding rate and they're not running this strategy, they're looking to hedge that. Same thing is if you are running a basis trading strategy, for example, where you have spot position, you can short on short an asset to earn the funding rate, assuming funding rate is positive. You want to hedge that funding rate position, you can do that on Boros as well. But I would say the recent success came from the oil markets, and we got extra attention on that front.
That's really interesting how you frame it. It's like a second order hedge, right? Because people usually go to Hyperliquid to make the first order hedge, as you mentioned, like you're longing oil, but then shorting it at the same time to hedge. And then you're coming to Boros to do a second order hedge just to avoid paying these high interest rates because of how many players are actually participating in this space.
Exactly. Yeah, that's what I would say.
Nice. You also like briefly mentioned about like token. You've recently had a transition from vPendle to spendle. So first of all, yeah, what led you to this decision to transition? Why did you decide that? And then maybe you can explain how Pendle token is abstracting everything that happens within Pendle, within Boros. How do you see even more products being launched under this one token? So what's the vision for the token itself?
Pretty simple. I wouldn't go too much in details on the data because it's gonna take like 20 minutes. Um, I shared a lot of that already in the past, so if listeners are interested, they can look it up. But the idea is, out of all the VE system, Pendle is the worst performing one in terms of participation. Yeah, we had like 20% of our supply participated in VE Pendle. We were offering yields of like upwards of 40 to 50%, and the participation is very low because the barrier of entry is way too high. You need a 2-year lock for that, which is a little bit ridiculous. So we decided to transition away from that model into spendle. So a lot more reasons behind that. We were overpaying for incentives. We were overpaying on a lot of things, but then it was a big overhaul, and now our emissions were cut by more than half. Now that we are moving to a much leaner approach in tokenomics and emissions. How we direct emissions were significantly improved as well, because back then during vPendle times, emissions were very poorly managed. Now that we are on S-Pendle, we see that participation improved quite significantly, actually, from 20% to almost half of the Pendle supply. So that's good. And we save a lot in Pendle emissions, so we're not spending as much to retain our TVL and traction. That's kind of at a high level where we are right now. Regarding products and revenue structure, we are not going to launch new tokens for Boros, obviously, and all revenue for Boros will eventually flow back to Pendle. And in exactly what shape or form, we have no idea and haven't decided yet. And I think it's a little bit too early for us to decide right now. But the whole idea is the value add and all the revenues that we earn should eventually flow back to Pendle holders. And that's the core thesis of the product, the idea of tokenomics. And regarding new products for Pendle, no plans for that yet for now.
Okay. Do you think the model is not working overall? Because a couple of years ago, industry was shifting more and more towards the VE model, longer lockups. It allowed to make tokens more sticky, but we've seen recently that there were more than couple protocols shifting from this VE model to different staking. So what are your general thoughts on where the protocol tokens are going to?
It doesn't work for us. It kind of, vPendle allowed people to channel incentives where they are supposed to go. That is assuming the people who are deciding on where the incentive should go are smart. But the thing is, people are not. And people are not active in your governance 24/7. And you can't expect decisions to be rational. And at least for Pendle, it wasn't working in our favor. That's what I would say. Yeah, it might be working for some other protocols, but I would say not for Pendle. To give a bit more context, right? We were offering such crazy high yield because the protocol revenue was growing so much. But then the people who are participating in the pool it's only 20% of the total Pendle supply was locked. And a good chunk of that is the Pendle team members, because we know the protocol and we put a whole lot of our Pendle into vPendle. And we're not, and then we are the one earning the growth of the protocol revenue, which is a little bit stupid, because ideally we want every Pendle token holders to enjoy this. That also makes us, when we pitch Pendle token to institutions and funds, it's very difficult for them to invest in Pendle because our revenue is being distributed to vPendle, which is something that they cannot participate in, because funds have a liquidity mandate. Like they have investors that they have to answer to, and then they can't lock for 2 years. So basically, if a protocol revenue is not reinvested in the company, or it's not being distributed as dividends, basically the protocol is not earning revenue then, because they're not entitled to receive any of those, and it's not being reinvested in the company. So valuation-wise, it's kind of difficult to pitch to any funds out there because they can't participate in such a system. It's kind of like an unfortunate reality we live in, but that model wasn't working well for us. Yeah, that's kind of as far as I would say.
Completely. Yeah, makes sense. Okay, shifting from token, would like to shift our focus to the current hot topic, vault, right? Curation and everything around it. Of course, Pendle has been very successful in the vault space. A lot of curators are using it to boost yields, to actually even hedge yields, right? For looping strategies and stuff like that. So yeah, how do you see, like, first of all, maybe when did you notice this, that Pendle fits so well within the vault curation market? And then where do you see Pendle fitting in this entire space? Because of course there are a lot of like moving parts and a lot of different protocols involved in the entire chain. So yeah, like where do you see Pendle fitting in within this entire risk curation market?
I would like to say we're not involved in any of the curation side of things. we are just a tool, and we tokenize yield-bearing assets into PT and YT. PT is a fixed yield. YT just earns all the remaining yields, all the yields of the underlying asset there. And then anyone can build on top of us, and we can build on top of anyone. And our job is to make sure the tools are easy to use. Pendle is easy to use, and anyone can build on top of us. And that's kind of like our job. So we are not involved in any of the curation or even building of these things. But I would say, at the end of the day, if you're running a business that that tokenizes yield, you want your assets to be integrated into these pools. So we work with the respective protocols to get our assets listed on their end. But the risk management side and how exactly these things get listed on the underlying asset, obviously is up to the underlying respective protocols decision to figure out.
Yeah, but at the same time, you're also trying to build some tools around it. Like you mentioned, like one-click looping, right? I guess this would fit for some of the curators really well. So it's still, as you mentioned, like you're just providing the infrastructure, but you want to make your infrastructure as easy to use as possible. So maybe you see some other potential growth factors in this space. Do you overall, maybe, are you still seeing growth in risk curation, or is it more like because of some recent events that people are becoming more careful and avoiding to put more funds into that? So what's your insight from infrastructure provider side of view?
Yeah, I honestly have no idea what's going on the risk curation side. Yeah, and we're not frankly not involved in risk curating at all. We provide the assets. If the respective integrators want to use a curator to look into the risk metrics of our assets, yeah, we have a list of documents and a list of things for you to look into on our risk factors of the protocol. But it's again up to the underlying protocols to figure it out. We build the tools to enable one-click looping, for example. It's just how you then want to looping is this: you put an asset into a collateral, into an underlying asset, you borrow, deposit back into Pendle, use that as a collateral again, and you borrow again. At the end of the day, this thing has to be supported on the underlying on like the money markets for us to build such a tool. So the risk is on the listing side of the underlying asset. If they allow for this, even if we do not build the tool, people can already do a PT looping strategy. We're just making your life easier by creating a tool to help a 50-click process into 2 clicks. That's kind of what we do. So the risk curation side is on our end, but it's rather on everyone else that's building on top of us or below us.
All right. And yeah, of course, touching base on the recent events, we saw Resolv thing happened, right? We saw issues with Layer 0 this week. Pendle has been successful so far in managing to avoid any huge events in the space. What's your view on the risk management, on making sure that user funds are always safe, right? Overall, like, what's your view on everything that's happening within the space, and how is Pendle managing to actually avoid this from touching you?
We are really well. We take security very seriously. That's for sure. One thing that we pride ourselves in is that our product is very isolated, in a sense that Pendle has yield tokenization, and then we have the AMM, the trading engine, the limit order, and also the tokenomic side. All of these are completely independent in architecture. That doesn't really it's not like if one part is compromised, you can't really compromise the entire thing on Pendle. It's one thing that's good. But we also take like small little things very seriously, like multi-sig signing, for example, or our validator architecture for our cross-chain assets, for example. In Kelp specific unfortunate scenario, yeah, we've had that idea risk we had that risk angle thought out. But at the end of the day, you never know what you don't know. I think we can do so much to prevent ourselves from being exploited, and yeah, try everything we can. We have pretty solid audits in place as well. I think, yeah, we try everything we can. That's all I'm gonna say. And then just use best practices uh, as often as possible. Don't use shortcuts. And generally, that goes a long way. My view on the space, though, is a little bit. I'm not sure. I think the Kelp situation is a little bit too fresh for me to have a view right now. We are definitely undergoing a heavy internal audit to make sure that all of our systems and processes are not susceptible to such attack. For Kelp specifically, it wasn't even a smart contract hack. The attacker was able to spoof a message on the validator network and know exactly which validator network to attack and know exactly the list of RPCs to attack and DDoS those that are uh, they are unable to poison, and they know that they're gonna fall back to the nodes that they are able to poison, which was a very interestingly specific hack. Um, but yeah, seems like it is that's what the unfortunate situation that happened to Kill. Again, at the end of the day, this could potentially be mitigated by having a rigid and robust internal process, but you never know when you don't. So we're doing a heavy internal audit right now.
Okay. Thanks for this. Definitely agree with your thoughts there. And maybe just to end on a positive end, what do you think we are missing as a space for achieving another 10x growth in TVL, in users, and overall to grow up as a space rather than being this, degen only space for high risk, high reward tokens or other instruments?
Yeah, I might a little bit contrarian given that I'm in crypto, but I do think there's lack of regulations and enforcements in this space. At the end of the day, if you are in a space where there's no repercussion for you to do a bad thing and everything lies on you to protect yourself, I think it is a very guerrilla space that we're living in, and I don't think that you can extend this to the normies, because you can't expect the normies to protect themselves in every single way possible. I can't expect my grandma to sign transactions on a ledger, for example. No way. Um, so yeah, just putting down the barrier of entry is one, but then in order to do that, I think there should be repercussions for malicious actors, I would say. Um, Kind of a contrarian view, given that I'm in crypto, but being in this industry for a while, my kind of perspective has changed a little bit more from completely independent, uh, you know, industry for nerds to have a completely independent space. To if we really wanted to grow, we need the involvement of more, governance and legal participations. That said, I do think that the underlying tech is good. The crypto tech stack is just fundamentally better than non-crypto tech stack, given how transparent things are and how things are very verifiable. So it is just a matter of time when we translate this tech stack out into the normal financial space. Yeah, but I think the journey there's gonna be long and pretty bumpy.
Yeah, nice. Thanks a lot for this. Thanks a lot for coming in. Maybe any final thoughts? Anything to share where people can find you, where they can connect with you?
Yeah, I'm generally active in the Discord, so I mean, you can shoot a DM to Pendle intern once in a while. I'll check it out, or just hop onto our vPendle Discord and come hang out. I'm there sometimes.
Amazing. Thanks, Dan. It was a pleasure having you here. Wishing you best of luck. Yeah, thanks for coming to Beyond the Yield.
Cheers. Have a good one.